We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Managing Director and CEO of Sunrise Energy Metals, Sam Riggall. How are you today, Sam?
Good, Tom. How are you?
Excellent. Great to have you. So
Thank you.
You recently opened or penned an open letter to the automotive industry this spring, urging auto manufacturers to work together with miners in order to kind of really secure supply. So can you walk us through some of the issues that you highlighted in that letter?
Yeah, sure. Look, the letter was maybe a bit tongue-in-cheek at the time, thinking about how the auto industry needs to start thinking about raw material supply chains. But there's a serious message behind what we were trying to convey. The automotive industry has not, throughout its history, been deeply engaged with raw material supply chains, and there's certainly a learning curve there coming up. But as the world decarbonises, and in particular, as we start to see adoption of electric vehicles, the amount of metal that will be required by the global auto industry is extremely large. And we can touch a bit later on where that metal is coming from. But it was clear to us very early when we started to see this move to electrification in transport that there was going to be a really large need to fill gaps for certain metals in these batteries. Lithium, obviously, nickel, cobalt, and to a certain extent copper. These are going to be key metals that will be required in these battery systems. I guess the point of the letter was to highlight to the auto industry, have you thought very clearly about where the supply for this material is coming from and how it is produced? If the objective to build electric cars is to address carbon abatement, there's no point delivering these metals in a carbon-intensive manner, and that's one of the challenges the industry will face. But look, I think my motivation for putting that letter together was really to highlight the differences in view and approach that I'd seen working in Asia, in China in particular, and in the West. In China, particularly when we were engaged with the supply chains and the auto industry there, you turn up to a meeting and the entire supply chain would be sitting across the other side of the table from you. It was a very coordinated, integrated approach, thinking from mining all the way through to delivery of the battery into the vehicle. We just don't see that at the moment in the West. We see sporadic levels of interest, and we've seen in recent days deals done for raw materials by certain car companies, but there's no, to us, integrated or holistic approach to how you address these supply chain risks that are coming. So the idea was really to, I think, wake up the car industry. They are, I believe, starting to understand some of the challenges, but bear in mind they're also an industry that's coping with an enormous transition within their own businesses. They're having to invest heavily in retooling their auto plants. They're investing heavily in moving to some extent upstream in battery production and battery sourcing. So they've got a lot on their plate as well that they need to manage. But if you want to control the two key risks that the automakers face, supply and pricing risk, they need to do something about raw materials.
So as you're talking about supply and pricing risk, what is the biggest risk metal for these auto companies from a pricing standpoint? Yeah,
look, lithium always gets, I guess, the interest in mainstream media, and it's mostly probably because these are called lithium-ion batteries. In reality, by weight, there's very little lithium in a lithium-ion battery. It is mostly nickel. And what we're seeing with the technology developments in cathode is that these cathodes are becoming more and more nickel intensive. Nickel basically gives the battery its energy storage capacity. Lithium provides the material for the exchange of ions that create the electrical current. And cobalt has a really important role in stabilising that lattice structure in the cathode. And there are a number of different cathode chemistries you can use, but clearly the state of the art and the way the industry is heading is for high nickel cathodes, probably stabilised by cobalt. If you think about what the challenges in raw material supply are, my personal view is that the world is not short of nickel. Living down here in Australia, you can see plenty of nickel projects that could quite easily get off the ground in the next few years. Nickel development is relatively capital light in terms of its intensity. And as we saw with most of the developments back in, 5 years ago, they can be built pretty quickly. So I personally don't think that the world is going to be struggling for lithium. It doesn't mean we don't need a lot, but there's plenty of resources out there. You saw Rio announce this week they'll be building Yadar in Serbia, and China continues to invest heavily in raw material supply. The biggest bottlenecks on raw materials to me are nickel and to a lesser extent cobalt. Nickel because it is very capital intensive. High quality nickel sulfide resources just don't exist today, and discovering them and bringing them in development takes, it's multi-decade process. So the world is going to rely on nickel oxide or nickel laterite resources for development. If we can't get nickel laterites right, by right I mean how we produce the metal and can we do it cost effectively. If we can't get that right, we're just not going to be able to produce enough nickel to service the electric vehicle industry, let alone grid storage and all the other applications we want for batteries. So for us, understanding hydromet nickel is really, really important, but it is capital intensive and it does come with some risk. Cobalt's a different beast. For those who follow the industry, that they'll be aware that battery manufacturers have been trying to thrift cobalt. Most of that thrifting is driven by what they see as, ESG concerns around supply. Most of the world's supply comes from the Congo, and there are concerns about labour practices there. My own view on that is I think over time, supply issues in the Congo will be resolved. There's a lot of focus from the supply chain on resolving how material is sourced and produced in country. So Congo will continue to be the major source of supply, but the beauty of nickel laterite resources is that not only do they provide nickel units, but they'll also provide the cobalt units for the future as well, and will be a meaningful source of alternative supply. So, look, if I was a car company CEO, I think the question I'd be asking my procurement group in this order is, where is the nickel, where is the cobalt, and where is the lithium? And more importantly, how are we going to source it to be able to manage the cost of bringing it into our supply chain? Because cost at the end of the day is going to be the ultimate driver of whether you can execute a successful electric vehicle transition.
Sam, I want to go back to something that you were just speaking about. You were saying that the world doesn't have, let's say, a nickel supply problem. Did you mean lithium supply problem?
Sorry, I meant lithium, yes.
Okay, I just wanted to clear that up just to make sure.
Yeah.
So when we're talking about nickel, there's two real grades. So can you explain to our listeners what the difference between grade 1 and grade 2 nickel are, and maybe let's say the proportions of each that are produced every year?
Sure. So in the battery industry, we've come to know these terms as class 1 nickel and class 2 nickel. And in general, anything that can be converted into a usable battery grade nickel cathode is classified as class 1 nickel. Anything that can't is class 2. For class 2 nickel, most of this material goes into the stainless steel industry, and it can come in many forms, but generally the feedstock that is used for stainless steel is converting nickel oxide resources, or what we call nickel laterites, into either a ferronickel product or a nickel pig iron. These are products that contain nickel, but they could contain predominantly iron units, and they feed these, think of them as concentrate materials, directly into the iron, the stainless steel manufacturing process. And the reason they're used and they're liked in the steel industry is that not only do you get the nickel units, but in general you get the iron units that are also valuable in that smelting process and in the blast furnace. Class 1 nickel can come from both primary nickel sources, so nickel sulfide deposits which are the deposits that we've grown up with over the last 50 to 60 years of development. What you see in Canada, the Sudbury region, what you see in Russia and Norilsk, what you see in Western Australia, those are principally nickel sulfide resources. Nickel sulfide resources are processed using a pyrometallurgical route. So we smelt them at high temperature, we tap off slag, we produce generally what's called an intermediate product, which is usually a matte, and then we'll refine that matte through to a high-grade nickel product. And in the past, that what was typically LME grade nickel metal was sold in the stainless steel industry. What we're seeing now is an emerging market for those metal units, whether as briquette or metal powder for battery production. So they take those metal units, they dissolve them in acid hydrometallurgically, and then go through a whole range of impurity steps to remove the remaining impurities to get to something that's really high purity. Nickel sulfate is the final product that goes into the products. The other route that, apart from sulfide, you can follow for a class 1 nickel is taking a nickel laterite resource, and instead of producing a nickel pig iron or a ferronickel, you use hydrometallurgy to produce an intermediate like a MHP, a mixed hydroxide product, or a nickel sulfide product, another intermediate product. In the case of the product or the project we're developing in Australia, we're doing it a bit differently. We will use hydromet on our nickel laterite resource, but we'll go directly through to sulfate without making the intermediate products. So the aim for us is to go direct to either sulfate or precursor in our step by going through a whole range of intermediate impurity removal processes. But in general, most of the growth in the nickel industry and the supply chain today is coming from class 2 nickel units, nickel pig iron and ferronickel. There's not very much new development in the space of class 1 nickel that can be used for battery production. And this was another point we made clearly in the letter, that you just can't look at nickel numbers because it's very deceptive as to where you're going to get the nickel that you actually need for producing batteries.
Absolutely. And just to touch on that a little bit more, what is the proportion of, let's say, class 2 nickel versus class 1 nickel per year currently? Yeah,
so at the moment, nickel used in batteries accounts for about less than 10%. It's probably closer to 5 to 7% of total nickel consumed that's produced every year. Most of the class 2 nickel that is produced in Southeast Asia. So you're looking at countries like Indonesia, the Philippines to an extent, New Caledonia. And here, this is where most of the large-scale nickel laterite resources are located. So what you've seen probably over the last 5 decades is a move from where nickel sulfide resources constituted about 70% of total supply to today where they're probably around 30%. So nickel laterites now make up roughly 70% of supply into the global nickel supply chain.
So Sam, if we see this real supply deficit coming and this huge demand for nickel, and especially class 1 nickel coming in the future that everybody agrees upon, considering the electrification of the world here, why is it so hard for junior nickel companies to be able to raise capital to be able to develop some of these projects?
Yeah, look, you could put us in that basket as well. We completed our studies on our project at the end of last year. We're now in financing phase, but one of the challenges is, until recently, you've seen very little interest from the major mining companies investing in battery materials. To some extent, you saw BHP had an existing nickel business. They're investing in upgrading their material to nickel sulfate, but generally the investment has been very limited. You're seeing Rio now making statements about committing to some form of lithium, but in the scale of their portfolios, the challenge has been interest. It just does not move the needle investing in these spaces if you are, a world-class iron ore producer or a world-class copper producer. I think that's changing. You're starting now to see, as I said, some of the majors dip their toe in the water. They do realise that this is a high growth market, but it may take many years for growth to emerge. The message I guess I delivered to the major mining companies on some of these issues is it's not just about having the resources, it's having the capability to deliver them. I spent a lot of my career in industrial minerals, not just delivering basic commodities, but also upgrading them into usable industrial materials that are needed. And this is the mindset you need for battery materials. To give you a sense, if you take a nickel product that is perfectly suitable for LME, you still have an awful lot of impurities in that product to remove before you can turn it into something that can be used in a battery. The level of specification is very high. So the major mining companies have been slow. They've also been very focused on generating cash flow returns to shareholders. So what you would have seen is a lot of development capital allocated out of free cash flow in previous decades just hasn't been coming back into the industry. It hasn't been reinvested. In nickel, some of the challenges related to exploration. It's, as I said, show me a high quality tier 1 nickel sulfide resource today, and I'll eat my hat. It doesn't exist. So we're going to have to find more of these, but as I said, the nickel laterites are going to have to do the heavy lifting in the meantime. I think there are a whole range of issues as well. You saw, I think, in equity markets, a real run up in equities probably 4 years ago, which was the start of the lithium boom. That bubble burst very quickly. As I mentioned earlier, lithium production can expand and supply can expand very fast if the prices incentives are there. It's just not the same with nickel and cobalt. If there's been any growth in nickel capacity and new capacity over the last few years, it's been in Indonesia. A lot of it's been class 2, but the Chinese are certainly investing very heavily in class 1 production routes as well, hydromet nickel production. They have about 3 or 4 projects that are currently in construction and in varying stages of construction or commissioning. So I think the next few years you'll see a little bit of additional production coming out of Indonesia, but it's going to have to be multiples on that if we're going to do something that's meaningful and delivers a solution.
So for investors that are looking at this space, Sam, do you think that nickel could be the next gold rush in a way? Well,
look, I'm always loath to pull my crystal ball out because I'll be honest with you, I don't have one. No one does. What I can say is when you look at, I guess, the fundamentals of each commodity that are going to be needed to drive this electric revolution. And when I talk about the fundamentals, you're looking at where are these resources located? What are the supply-demand fundamentals that drive them? What's the capital intensity of building them? Which of them are byproducts and which of them are primary commodities? You have to keep coming back to nickel and cobalt as the biggest problem. And you don't have to be a rocket scientist. The automakers are already saying this. Musk was saying this a year and a half, 2 years ago. They identified, having worked with their supply chain, that, oh shit, nickel is the biggest problem we're going to face. And it's proving to be the case. Nickel prices are starting to reflect it. It's an incredibly volatile metal and hence coming back to risk for the auto sector. But, nickel prices have now moved to 7-year highs again. It's not just the LME price that producers are paid for. If you're going to go through to sulfate, you're also paid a sulfate premium for producing that high spec product. So, nickel and cobalt to me are probably going to be the ones where the industry realizes they've got a crisis in the next year or two. And, to be honest, the mining industry hasn't helped. In previous cycles, you would start to see a real kickstart in investment to bring new capacity on. In lithium, you'll start to see it again pretty soon, but you just won't see it apart from what China is doing in nickel and cobalt probably for some time. And as you know, with the lead times on these projects, by then you're probably looking at the end of this decade to start to see first metal production from big projects.
Mm-hmm. And as you're mentioning the way that China's supply chain is really set up, I want to get your thoughts towards how important these metals are going to be for the future, and do certain countries, let's say the Western countries, really need to become more strategic about their thinking about the supply of these metals. And maybe as part of that, explain to us if there's any of this metal that can be sourced from China anymore or not.
Yeah, so in general, for most of these metals, China is relatively poorly endowed. So you're not finding you've got one large nickel mine and nickel complex in China. You don't have much cobalt there. They have some lithium production, but it's generally high cost and low grade. Where China has built a really strong presence in the supply chain is around processing capability. So, as part of their go out policy in raw materials implemented 2 decades ago, they went out and they've secured around the globe very strong ownership positions in primary raw material supply, whether that's in Africa, whether that's in South America, whether that's in Australia. They have very significant investments around the globe in feeding what is a very large processing industry in China. Interestingly, with the investments they're making in nickel in Indonesia at the moment, the Indonesians don't want to play that game. The Indonesian government is putting some very clear restrictions around the export of material out of Indonesia. There are restrictions on exporting ore, and I expect over time you'll start to see restrictions on exporting even higher value products out of the country as well. The aim being that investors should be value adding in Indonesia. And that will happen, I think, in a lot of countries around the world. Will it undermine, I guess, China's dominance in materials processing? I don't think so. In some ways, if this is a 400-meter race, China started the race some time ago. They're probably at the 300-meter mark before the others have started. Mm-hmm. It's going to be very hard to peg them back. So I don't see the world weaning itself off Chinese refined production easily. But having said that, what we're starting to see out of the United States government at the moment, what we're seeing in the European Union is now a very, very strong focus on how their industry can put their foot on raw materials and how they can also bring downstream value-added processing within their jurisdictions. So I think for us, we have a project where it's a large one. It's very engaged both in Europe and North America to understand what the requirements are there for trying to build these supply chains. But as I said at the start, this is not a case of working company by company to try and find solutions. You need to bring an entire supply chain to the table to understand how you can build a holistic solution that manages both the availability of the raw materials when they're needed and also the cost at which they're delivered into that supply chain.
Mm-hmm. So when we look at the Sunrise project, what sets it apart to be able to really improve efficiency for the auto industry, let's say, and not just be a typical mining facility?
Yeah, so this will be probably the largest and most integrated of the battery material plants that has ever been built. And that was deliberate. I mean, we started this project about 6 or 7 years ago. And in doing so, we were engaging at the outset with the automotive industry, the battery industry, to understand what it is that they need to be delivered. At that time, the way they were producing their cathode materials was to go into the market, buy nickel metal units and cobalt metal units, send them to toll processors to dissolve them in acid, and then do all these complex processes to convert them to something that can be used. Instead, what we did at Sunrise was to say, well, the mining is relatively low risk. It's very shallow. It's like a strip mine. What can we do in the processing plant that delivers optionality that is very valuable to the auto industry? The first thing we looked at was direct to precursor or direct to sulfate routes. So in our case, we're not producing intermediate products that need to be sent offshore for refining. We don't produce an MHP or an MSP. We take the metal in solution and we go directly through to a battery grade sulfate, or if we choose to, a battery grade precursor that can go into the cathode. And we do that using our proprietary process, which is ion exchange. So ion exchange has been used for decades in lots of different mining projects around the world. All we're doing is using it here for nickel and cobalt because it is extremely selective in the metals it can pull and the impurities it can target. The second thing we looked at was recycling. It'll happen in the US eventually, but the European Union has already moved to ensure that all future batteries that are installed in cars will have a minimum recycled component in the raw materials. So that led us to thinking, well, if we're going to build a refinery to produce high-value sulfate or precursor from the mined material, how can we use that same infrastructure to take back used batteries and recover the nickel and the cobalt and the lithium or whatever we need? So the products that will come out of the back of the Sunrise project will have a naturally installed component of recycled material in there. We plan to take black mass, we'll feed it into the refinery with our primary stream, and we'll have a recycled content coming back also through there. The location is also very important for this supply chain, particularly one that's focused on risk. If you're an auto company and you're happy to invest in Central Africa, in the Congo, if you're happy to invest in Indonesia, if you're happy to invest in New Caledonia, by all means, go for it. But there are some companies who want to take that risk out of their supply chain. And, going back to my earlier career at a large mining company, it ticks the boxes of large, long life, low cost. This is a 50-year operation, and it has optionality for scaling. So we can make this larger in future if we need to. But to give you a sense of its scale, there's enough nickel and cobalt in this resource to convert probably around about a quarter of the US's car fleet today to electric, or remove 25% of the US nickel dependence, imported nickel dependence today. So it's by no means a silver bullet. There's no silver bullet in this industry, but it could have a very meaningful impact on North American or European supply chains.
So, Sam, as you're mentioning the recycling side of these batteries, how big is the actual recycling industry, and does it have any meaningful impact on what is needed in new supply of these metals?
No, it's very small at the moment, look, I would say that the industry that's focused on recycling lithium batteries is nascent. It's really just beginning. So. But you're starting to see a number of companies now investing heavily in this space. In fact, overnight I saw Redwood Recycling in the US raise $700 million for testing its facilities and building piloting operations in the US. So there's going to be a lot of investment in recycling, but I think people also need to keep in mind that recycling is not going to be a solution here. If you look at the life cycle of a battery, at best, given the growth projections we're seeing, at least for the next few decades, recycled metal is going to probably make up maybe 10, 12% maximum of the metal that is needed for this industry. So it is by no means a solution, but it is important to pull these valuable metals back out. There's been a lot of talk, and Tesla's probably been one of the exponents of this, as has Volkswagen, about replacing nickel-containing batteries with lower quality, cheaper materials like lithium iron phosphate chemistries and so on. It's interesting, and there's no doubt that lithium iron phosphate technologies have improved, not as fast as nickel chemistries have improved, but they have improved. I think the interesting thing that's often overlooked with that discussion is its impact on recycling. The only reason there is ever a recycling industry is because the recycler can recover payable metals that justify the cost of actually going through the recycling process. As soon as you move to an LFP chemistry for producing these batteries, there is no economic incentive to recycle these batteries anymore. We've been to a number of recycling plants over the last year and had a look at the way they set up their operations. There's always a corner of the factory that is piled full of batteries. And you ask them, what is that? And that's all the LFP chemistry. They're not going to touch it. They don't know what to do with it. It's a loss maker for them. So this is a big challenge, because you want to be able to recycle these batteries. You don't want to put them back into landfill. And the only way to make recycling an economic opportunity is to make sure that there's enough nickel and cobalt that can be recovered in those batteries. In general, most of the lithium is not recovered. It's too difficult to recover. That'll change a little bit, I think, over time as time moves forward. But if you don't have the nickel and cobalt there is no economic case for recycling in this industry.
Sam, do you know what the average lifespan of these batteries would be before they can be or need to be recycled?
Yeah, so you can go by, I guess, the warranties or the guarantees that the automakers are prepared to put on the batteries themselves in their cars. And look, they range from 8 to 10 years. Tesla has a great blog site where its users have put up statistics on the performance of their batteries over the lifetime of their vehicles. And they've been doing this for a decade now, so there's a long history of data there. Over a decade, you might expect to see a battery reaching the end of its life still with 80 to 95% of its capacity still available. That seems to be the range of where it is. You do, though, at around about 80% capacity, start to see quite a quick and accelerated drop-off. And that's where the industry starts talking about repurposing batteries. So taking them out of vehicles at that point and maybe putting them into a different application like grid-scale energy storage, where performance is not as high. So there'll be lots of different routes to how these batteries come back into the recycling ecosystem. It might not be directly out of the car, it might be through different routes. But look, I think in many cases you'll see probably a 10-year life cycle in a vehicle. And for grid scale storage, you might be looking at different technologies. You might be looking at redox flow or other approaches for doing something for grid scale applications.
Mm-hmm. So Sam, something we've seen some news stories about recently, and that you might be familiar with is the metal scandium. Can you tell us what that is going to be used for and what the significance of it will be?
Yeah, look, scandium is a really interesting metal, and it was the first metal we identified when we purchased this project in Australia, Sunrise, because it had the most elevated grades of scandium we've seen in any resource globally. We then drilled out the nickel cobalt and found a very large nickel cobalt resource as well. But the scandium was what drove the initial interest. And the interesting part of scandium is that it's been known about for decades as the most effective alloy that exists for aluminum. In fact, it was Boeing and Airbus who developed the first patents back in the 50s and 60s around aluminum scandium containing alloys. And the reason scandium is valuable as an alloy with aluminum is that it makes it stronger, incredibly strong. It makes it corrosion resistant. It makes it weldable. And as we start to see 3D printing applications emerge, it makes it printable as well. It's one of the only alloying agents with aluminum that allows you to print aluminum. So it was well understood that it had these amazing properties, but there has never been a primary source of scandium mine supply ever developed, basically because it occurs in the crust at quite low concentrations. But that has always driven a chicken and egg problem. There hasn't been the scandium, so applications haven't evolved. So people haven't mined it. And that's meant that prices of the material have been particularly high. It's been a disincentive to using it in applications. What we're going to try to do with the Sunrise project in Australia is scandium will come as a very, very cheap byproduct of the nickel and cobalt production. And we're going to try and, we have been over the last few years developing applications for scandium with a number of our industrial partners. So we're working with Panasonic. In the US, we're working with a company called Relativity Space, who 3D print their rockets for satellite launch. Again, scandium is very important in printing applications there. Working in Japan with some of the aluminum producers there to produce components in automotive and aerospace. So we're trying to build, a counterweight of demand and interest for this material in a range of applications that currently just use different alloys, lower performing alloys, and make the case that at a certain price point for scandium, it makes sense to start adding scandium to these alloys. I liken scandium to where niobium probably was 40, 50, 60 years ago. With the discovery of a very large deposit in Brazil, which still is the world's largest primary source of niobium, you've built a $40 to $50 billion industry by targeting niobium as a key alloy in steel. So, and again, for the similar applications in corrosion resistance and strength. So, to me, scandium is very interesting because it's the foundation for a new generation of very lightweight, strong alloys. And there are a whole range of other applications where we're starting to see it used as well, such as in 5G and 6G communications technologies, semiconductor production and other areas.
Interesting. So there's many future applications, and as you say, you're trying to help develop the market for it, right?
Yeah, that's right. And look, the world, I don't think, will be short of scandium. It's often lumped in as a rare earth, but like many rare earths, it's not particularly rare. The challenge with processing these materials comes in the complexity of, I guess, impurity removal and how you produce them cost effectively. But there's no geological scarcity for these materials. The thing we are trying to do, though, is build a business model that delivers this product as a very low-cost byproduct of other production. And by then providing a very low-cost, scalable supply source, you break that chicken and egg problem wide open, and suddenly you've got a lot of material that can be used quite cheaply in a whole range of applications.
Interesting. So, Sam, I've heard you say before that innovation is just hard work. So can you share your thoughts with us around this?
Yeah, sure. So Sunrise Energy Metals, the company I run, used to be called Cleantech. Cleantech was a company that had been around for 25 years, and its DNA is around innovation and technology. It was focused on a number of technologies that were really targeting separation and extraction. So if you could put something into solution, we had a technology to pull it out of solution very efficiently or remove impurities effectively. So using those foundation technologies, we built two businesses. We built a water treatment business, which is now separately listed as Cleantech Water in Australia, and Sunrise Energy Metals, which is focused on metals extraction and with a particular focus on battery materials. And it's all about hydrometallurgy. So we use ion exchange systems to pull metal and remove impurities. Why do I say innovation is hard work? Because Cleantech was around for 25 to 30 years trying to convince the mining industry that it had a very, very neat, low-risk, cost-effective solution for doing certain things that could produce higher quality products. Now, coming out of the mining industry, I've spent all my life in the industry, is inherently conservative, particularly in big mining houses. There's a way to do things. They don't push the envelope on new applications, and often it's understandable. You're making very large bets by writing very large checks at the start of a project and hope over time to recover them. And you have to get these projects commissioned and ramped up as quickly as possible. So no one in mining likes to countenance much technology risk. They try to avoid it. But that's the market that Cleantech worked in for many decades, and ultimately very successfully. We deployed plants all around the world for our clients. We worked in a whole range of commodities. But the point came when we said, well, this works so well. We've seen it work in gold and copper, that why don't we have a resource ourselves? Why are we the technology vendor here when we could actually be the developer of the new generation of raw materials and the process needed to produce those? So that's the journey we started about 7 years ago. We acquired Sunrise, which at the time, and still is, probably the best nickel laterite in the world. For us, we said, why don't we marry that with the technology expertise that we've developed and look for these routes for direct to sulfate, direct to precursor, recycling, all this stuff that we've built capability in over the last decade or two is readily applicable. The time has come. So, I feel like that it's been a dress rehearsal for the last decade or two in getting ready for what is coming. because what is coming is undoubtedly the most important industrial transformation the world has ever seen. And for us, we think we're uniquely positioned to be able to take part in this and probably also pioneer some of the processing templates that are going to be needed to produce the metals and the chemicals that are needed.
Excellent, Sam. Is there anything else that you'd like to share with us before we wrap up here today?
Oh, look, I think for us, for investors who listen into your show, my rule in this industry is always back the horse and not the jockey, and that means look for the quality resources. It's very important to have good management teams who can both finance, develop, and operate assets. But I've never seen a world-class jockey ride a mule to victory. So, as an investor, you have to be pretty discerning in understanding where the best resources are in the world. We understand that. We've tried to put our foot on what we think are the best nickel cobalt assets that exist in low-risk jurisdictions, and this will require patience. So I know that's not a word that equity markets like to hear nowadays, and it's something that I had to get used to in my career because there just isn't the patience for long-term resource development that there used to be, particularly when the mining industry isn't funding development anymore, and more of that responsibility falls back to equity markets. Who are really looking a quarter to 2 quarters out. We're talking about projects that are needed to service this industrial transformation that are a decade in gestation. So you need patience, but if you can identify the projects that are high quality, you're comfortable that the management team has a track record in delivery, you should be placing bets now because, in my view, in the next year or two, this market is going to get very, very ugly. And particularly nickel and cobalt, where the auto industry is already saying publicly that they have a problem. That's probably the place to be investing, in my view.
Well, Sam, I really appreciate you sharing your thoughts with us around this subject that probably doesn't get enough attention. Really, really appreciate your time today. Of course, if anybody wants to find out more about Sunrise, it's sunriseem.com. Anywhere else you'd like to point our listeners to, Sam?
No, that's where you'll get all the information.
Excellent. Thanks so much for your time today.
Thanks, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.